All right, hey traders, TG Watkins here. It is January 19th when I'm recording this, Thursday, and I hope you guys are having a good time out there. The market has been moving, we get that. And finally, it did actually what we were looking for. Since the market has been moving up, basically at the beginning, well, it took a little bit. You know, we know that the market was kind of going sideways for about 3 weeks going into January. Internally, we could see that the breadth was starting to actually go positive. So internally, even though the market was going sideways, there were quite a few names that were starting to move up kind of beneath the surface. And so the market finally posted again, moved up, and then it had been moving up for about a week and a half. So, that's all great and well and everything, but at some point I was like, this thing's it's getting extended. And what I could see was this gap here between price and the hourly 50. It was becoming too much. I was like, hey, at some point, this thing is going to be running, it just starts to create a gap between price and the hourly 50, which means it loses some support. It's, there's no base below it. There's just air pocket. And so what was happening, it was following the 15-minute 50 pretty nicely like that. But we were starting to get some negative divergence. We could see prices moving up, the Moxie indicator moving down. And then what came out was the PP, consumer price was CPI and then PPI. And then we also got, I think it was retail sales came in for December. And, December, it's Christmas, it's the shopping season, all that kind of stuff. And people were looking at this and seeing, hey, is this going to be a strong season? Is this going to tell us how the consumer's doing? And apparently the numbers came in weaker than expected. So we got a little bit of a move up in the morning. And this is something to note. I mean, look what happened as it turns out. There was a double top right there. And, I was looking for when the market was going to roll over. I didn't know necessarily when or what the trigger was or whatever. But there you go. It was a double top. And the other thing going into this that was telling me like, hey, we really need to be careful here because we're running out of energy, is that we continued to move up and notice the Moxie indicator continued to move down. And really, when it came right here, we were looking at, let me get my cursor, there we go. Right there, we could see that price was still over the 15-minute 50, but notice the Moxie indicator was starting to go below zero. So this was starting to turn into what I call an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. And so it was just telling us like, hey, any moment this thing should start breaking. And lo and behold, it did on that news, and also with the double top right there. Now, for my Moxie subscribers, I've been saying I was looking for, SPY 390, something around there. Basically, what I was looking for is I wanted to see price get underneath the hourly 50 and get to, the moving averages move, but at the time I was like, it'd be great if price came down to about the daily 21. Well, price kept going up for so long that by the time this pullback happened, the 21 had moved up further. So, it's like, okay, it's going to go wherever it's going to go. But basically, I could see the price going below the hourly 50. I'd like to see it stay above the hourly 200, which it's doing right now. And that sets us up for a potential trampoline move. And remember, a trampoline move is when price is below the 50, but the Moxie indicator is above zero. Now, I say potential because this doesn't have to happen. This is still pulling back. You don't want to catch a falling knife. But it sets us up for the condition that if this finds a bottom in through here and starts to move up and this stays above zero, that's a trampoline move. Just like this was an inverse trampoline move on the 15-minute time frame. Now, we've also seen this before. So there was some recent, kind of zoom back here, the similar setup in the market was back here. So you can see price dipped below the daily 21. The Moxie indicator was crossing over zero, so going positive. The 8 was over the 21, and it crossed over the daily 50. Well, this seems kind of similar. We have price dipping below the daily 21, the Moxie indicator is above zero, and even back here on the hourly chart right here, we had price dip below the 50, but above the 200, while the Moxie indicator was above zero. We're seeing basically the same situation, okay? Same general situation. That's why I'm not quite ready to short this as far as a swing short. This is the first move down after a pretty good move to the upside, so right now, I'm trying to see if this is a dip and an uptrend. When this starts to come out of this dip, we need to see, is there broad-based participation? Because I can tell you, there was pretty good broad-based participation in this move, unlike the move up in August. We know that the market had a huge run up in August. There were a lot of names that were popping off. There are more names doing better now than there were back then. Now that doesn't mean that we can't still roll over. So let me just bring up a chart. This is from 2000, and we can see right here in 2002, we could make the argument that we could be something like this. We kind of rolled over, hit some level, we had a pretty big move up, and you know what? It just kept getting sold into until we had the next big move to the downside. Totally possible. The other thing is, if the market does move down like this, and we do get a crash of some sort, what could happen is maybe it's not super deep. We don't know how far it's going to go down. And if it does move down and we do make new lows, there's a possibility that actually maybe a lot of stocks don't go with it. There is the possibility that a lot of stocks have already been repriced and have already gotten hammered. And they're starting to say, look, we have already redone our PE ratios. We've already done this. We've already been, taken out to the woodshed and all that kind of stuff. And we're just not ready to go down anymore. Now, it doesn't mean that they're going to thrive if the market's going down, but it could mean that they just kind of go sideways and hang out while the market goes down. That's possible. So we just need to kind of make sure we think about that as possibilities. Now, if the market wants to actually hold up a little bit, may I just introduce you to the 70s? So there is a possibility that, if the market does decide it wants to go higher, it could go higher. Okay, we're not confirmed yet. We're not doing anything yet. But if we are like pulling out our hair and be like, why is the market going higher? Well, it's possible because there were multiple bull markets in the 70s, and there were multiple bear markets in the 70s. Okay, so we just need to keep our minds open or our eyes open for possibilities like that. Of course, we have to keep following along and watching the tea leaves and seeing what we can do. So yeah, at this point, I want to see if maybe something around the hourly 200 ends up being some support and we actually get another leg up. We'll have to see if this next leg up is, the last hurrah, or if there is something a little bit more serious to this. Maybe some bullishness. We've actually, it looks like we've kind of put in a head and shoulders. If you're looking through here, we had a inverse head and shoulders that got us started to the downside, and we have a regular head and shoulders here that could be taking us to the upside. Now, how far is that going to go? We don't know. We are literally right there at kind of the make or break. Okay, we're definitely at the make or break. We've had this trend line that has been working. If I could draw that straighter, we've had this trend line that has been working like that. We've got the weekly 50 that has been working. We've got the daily 200. We've got the monthly 10. I mean, all these things are acting as resistance. But we actually are seeing some pretty good support breadth-wise for the market. The other thing that I've been seeing is if we kind of look around at, say, the VIX. Sorry, I always forget. I need $sign. The VIX, well, it's down. It's been making new lows, and I don't really know what to make of it yet. Is this going to be an undercut and rally? Is we seeing divergence? Or is price not going to be able to get past the daily 50, and even though it might spike a little bit, it's probably might continue to kind of just fade a little bit. I don't know. We're kind of at a point where, yes, we're bouncing, but I don't see a new uptrend. It's just so far a bounce and a downtrend, and price has not been able to get past the daily 50, even though the market did pull back in December. The other thing is if we look at the UVXY, and we look at this, this name has, let's see, get this a little bit further out. This name has just been going down and down and down, and it's kind of the same thing. I mean, look. Even though, right and through here, even though the market, the SPY, moved down in December, it didn't respond. It didn't care. And somehow the market knew, or the powers that be knew that the market, when it was pulling back in December and flagging sideways, was actually a pullback into strength. And of course, that's why we see the pop up now in January. So things like this, the VIX and the UVXY, kind of knew that, because that's why they didn't go anywhere. They couldn't catch any traction here on the hourly chart. So here we are again. Is this going to start catching some traction? If this actually does start to catch traction, the VIX catches traction and starts moving up in a somewhat consistent way that is actually following engaging moving averages, and they want to move up, then yes, they would probably give us a signal that the market's going to roll over. But if they continue to just kind of not do anything and meander down and not give us any signs or signals, then it indicates to me that the market wants to keep moving up. We could even see here, like, look, lots of volume, little volume. There has been a drastic drop-off of volume basically up here, and that was October 13th. As it turns out, hindsight is 2020, we can look at this and say, you know what, for now, the bottom of the market was October 13th, and that is when a CPI reading came in showing that inflation was starting to come down. So it's interesting to see that that is when the market decided to turn. The other thing is if we look at the IWM, now I know that the IWM, let me actually pause. Now I know that the IWM was definitely overbought. We're seeing this with a lot of different names, okay? They're up here at the third ATR. It was gapping off the 8 EMA. It was a giant gap between price and the hourly 50. Like, we know this. We, just like with the SPY, all these things, we could see that, yes, this was a pretty good run, but it was getting too much. It was getting risky, and it was just doing all the things that said, hey, the long side is probably going to tire out, and we should be expecting a pullback. Now, is the pullback going to be into strength? Is this pullback going to be actually into strength and back into the daily 21, the daily 50? There was a trampoline move here on the daily chart. Like, is this pullback going to be the start of a new bull run? That's really what everybody's trying to figure out. And that's what I'm trying to figure out too. We need to look at this and say, hey, if this comes down and continues to move up and there is good broad-based participation, then fantastic. We will take this and we will run with this on the long side for however long it lets us run. Or is this just another bounce and a downtrend, and we were going to meander around a little bit and we're just going to continue to roll over? Don't know. And I'm telling you, as many traders out there are their decisions and opinions on either side of this. It's pretty, it's really pretty swayed on each side. So, if we look at this, it has really been putting in a low. We could see that there was a double bottom here, and now we're putting in a higher low. The other thing I'm noticing is that price could not get past the weekly 50, but now it's getting past the weekly 50. And we are also starting to get past the monthly 10. So, can this change? Of course this can change. Yes, it can base and flag for a while and then continue to roll over and go down. Sure, of course. But for right now, these things are starting to show that there's some strength. It's just showing strength. If we look at the Dow, we've gotten over the monthly 10. Now, of course, I'm not saying the Dow is going to be what carries the market, but, it is over the 10. And yes, the pullback pulled right back into the weekly 21 EMA and the weekly 50. And if this can generally hold and continue up, then great. We're going to be bullish. And if we look at the NASDAQ, the NASDAQ is the laggard. We know that. We definitely need the NASDAQ. We need tech to get on board if this market is going to go anyplace. But it's put in a double bottom. Can this thing continue to hammer something out and move up and chase? Is this going to be able to pick up the slack and have to play catch up? If it can, then yeah, the market's going to be in good shape and we'll see this going. Now, the other interesting thing that I did, and you can do this between the NASDAQ and the SPY and even the IWM, if you do a Fibonacci retracement from the COVID low to the peak of the market, this is a 618 retracement. So other than also sitting on the monthly 50 SMA, it is also sitting on the 618 retracement. And if you go to the SPY and you go from the COVID lows to the peak, this actually right here, that October 13th date, was a perfect 50% retracement as well. So, for now, there are some pretty good reasons to be seeing that the market is actually coming down and sitting on some of the support. And then we also know that the semis have done this too, and they have, that trend line I was talking about, they have not only broken out of this trend line, they have now tested the upside of that trend line. And we also now have the 8 over the 21. This is basically the best the market has looked yet. The internals and the indices and all this stuff look better than they look even in August. Now again, I have to, cover my tail on this. Of course, things can change. This can be the best things look, and the market can still roll over. It depends on news. Maybe if we're going into that recession now, if numbers get bad, all that kind of stuff, it can happen. But we don't know. That's why there's so many people debating all this. And either thing can happen. So we need to just, follow along, see where we can go with this, and we play what's in front of us. And if things deteriorate and start rolling over and going down, great, we can play the short side. But if the strength continues to build and maintain and stay, and these pullbacks are pullbacks into strength, then we need to not fight that too much and go with it. All right, so Let me get over here. We can talk about, yeah, some crazy moves that obviously need a pullback. We look at jets. This is the ETF for the airliners. I will show you that there was a inverse head and shoulders. I will also show you, just like the market, that there was a regular trampoline move. So price below the 50, the Moxie indicator above 0. And then, there was a little bit of divergence. A lot of these things set up on the 15-minute time frame, but they exploded up here. Now, a lot of it could be argued that all these big moves are really just short squeezes. Totally possible, because the put-call ratio is extremely high. The 10-day moving average for the put-call ratio is the highest that it's been all year going into the end of the year. And so since the market didn't go down and it popped up, yeah, we could make the argument it's all just short covering, short squeeze, and all that kind of stuff. And once the shorts are squeezed out and there's no real buying that comes in behind it, then yeah, these things can just keep fizzling and they'll roll over again and start fizzling on out, just kind of like what we saw in August. So we're going to have to keep watching and seeing what that is. That's why, clearly I don't want to be buying anything up here, because that's really extended outside of any of its ranges. I want to be looking to see, okay, obviously we're expecting to pull back, but now we have to see, is this pullback into support and strength, or is it not? And we don't know that yet. We're going to have to keep watching, because it's just developing right now. The other thing is, if we look at, see Carnival cruise lines, look at it's basically the same thing. And you can see here, trampoline move, price below the 50, Moxie indicator above 0. It did, extended, ran into moving averages, super extended, finally starting to pull back. Now we just have to say, okay, is this pullback going to be into strength or not? Now, the other thing is, if we go back to the monthly charts and we look at, say, jets, we again, inverse head and shoulders, right there. And look at this. We're making progress. Look at jets on a weekly time frame, and you'll notice that other than when it first started, it has been following or staying underneath the weekly 50, this one, even here, below the weekly 50 the whole time. Now look, now we are clearly over the weekly 50. So are we building strength, or is this just another big rug pull? I kind of look at some of these things and I say, well, yes, we need a pullback, but we're starting to see some strength. These things are actually starting to put in what seem to be like legitimate longer-term bottoms, So that's jets. We look at CCL, still weak, hasn't totally transitioned yet, but look at this. We have inverse head and shoulders. It's trying to do some ebbing and flowing. There's an elf shoe right there, and it looks to me like it's trying. This is putting a valiant effort to put in a base, and looks like it wants to try and start getting up over its monthly 10. So, it doesn't have to necessarily jump up and rocket out of these things and start a new bull trend. But as I said, if the market goes down, if the market continues to be a bear market and continues to go down, stuff like this, maybe it doesn't go down. Maybe it just goes sideways for a long time. There could be ebbs and flows and trades to take as like that. But what if it just doesn't go down? What if this thing is already repriced? And so it could be building a base for whenever the market is ready to move up and, finish the bear market situation. Let me show you some of these things. Build-A-Bear. What is Build-A-Bear? If we're going into a recession, why is Build-A-Bear up here? I don't know. And so far I haven't found anybody who can really give me a legitimate answer as to why Build-A-Bear, looked like it was topping out and then spiked. And I'm seeing this with a lot of retail stocks. Look at Guess, Gap, Dick's Sporting Goods, Deckers, DXLG, it's big and tall. It's crazy. Abercrombie and Fitch, American Eagle. Look at Burlington. Look at this. Burlington Coat Factory. What is this? Why is this thing going straight up like this? Okay, so it doesn't necessarily make sense to me. I don't really know what the deal is, but these names, for whatever reason, decided to just go vertical and go up like this. Now, is this a great place to buy them? No, of course not. These things, like the move has already happened. We're starting to see some negative divergences start to kick in here. We can also say in through here. So, these seem like they're on the verge of starting to pull back. Look at the giant gap between price and the daily 50. So, yeah, these things are really they've had their huge moves. I think that they should be starting to pull back. So maybe you can tackle those. But yeah, they're big move to the upside. AXON, Taser, look at this. Huge move. Huge move. That's on a daily chart. Now, is this running into resistance? Yeah, it kind of seems like it. Maybe this is the end of its run. But still, it had a pretty good run while the market was moving down. And so we just need to be careful and nimble that there can be good moves in this market, even with the market going down. So just as I said, even if the market goes down, if Apple and Amazon and Tesla and all these bigger names, if they start going down, and yes, the market goes down and the indices go down, there are names that can still move up, partly for whatever reason they've based or just, good PE ratios or who knows what. Look at DHI. Now, same thing. A lot of people are talking about the housing market and with interest rates moving up. And, I just saw that housing cancellations were the highest. They're as higher, if not higher, than than they were in 2008. So, yeah, we're seeing a lot of bad things in the housing industry. But DHI, DR Horton, straight up. My understanding from some things that I've kind of researched is that, this is because they have a good PE ratio. So it's technically safe investments. Now, will that change as earnings start to come in and all this new housing data comes in? Maybe. Maybe this thing is actually starting to run right into its previous high, and it has not touched its daily 50 yet. So this could be at risk of a pullback, and some of those economic numbers might come in. So I wouldn't really chase this. But again, I want to show you double bottom, positive divergence. It tapped the 50 right there, and it started to move up. Like, the setups are there. And this was a trampoline move right there. Price below the 50, the Moxie indicator above 0, and then it just followed the moving averages. So there are setups, there are things that are happening, even with the market just not doing much. Intel, INTC. I want to show you that there are some potential setups. Look at this. So on a daily chart, I'll show you on the weekly too, but notice this. It's pretty much been following a downtrend the entire time. Does this not look like a bottoming pattern? It sure looks like one to me. Now again, it doesn't necessarily have to go anyplace. It can go sideways and kind of chop around for a while, but boy, that sure looks like a double bottom with a Moxie trampoline move, okay? And yes, it had a pretty big move. It got overbought. It ran right into its previous high, so yes, it needed to pull back. But look what it's doing. It's pulling back. So, if DHI and Build-A-Bear and Burlington Coat Factory and Jets are examples of what can happen even if the market goes down, well, just keep an eye out. Maybe Intel can go up if the market rolls over, simply because Intel is at a point at which it's just decided, I'm repriced and I'm good. I'm gone down all that I want to go down to. So, look at this. Look at that elf shoe. That's beautiful. Look at that. I mean, that looks great. That is a great potential. It doesn't have to work, but man, that sure looks like it wants to try. So that's Intel. We could even look at Scott's Miracle-Gro. Look at that. Same pattern. Same exact pattern. So you can see that there's been a downtrend this entire time, and what is it doing? It's putting in a higher low now. And it looks just like an elf shoe. So, there's something here. Now, Scott's Miracle-Gro is more in the cannabis industry. So keep an eye on this. Maybe this is, their money is rotating. Money's rotating. It's just because the indices move down, and just because Apple and Amazon and Microsoft move down, doesn't mean that there can't be other stocks that actually move up. So there's that. RKLB, Rocket Lab. I wanted to show you this one because, yes, Rocket Lab has started to be moving a little bit. But as I said, some of these names, even though they're basing and bottoming, they don't necessarily have to go anyplace. You can see that there's a nice double bottom right here. And it did move up a little bit. But you know what? Here's the third one. So this is the tricky part. This is the difficult part with trying to trade through this environment right now, is that they don't necessarily have to go anyplace, but they also don't have to go down. So what is it, that song, like you can't stay here, but you don't have to go home? So it's kind of like that. Okay, so just because you see a double bottom doesn't mean it can't turn into a triple bottom. Okay, so there's Rocket Lab, another kind of ETF, RETL. Look at that, very, very similar, isn't it? Kind of looking very, very similar. You can see, hey, doesn't want to go to any lower. It can still go lower, sure, but right now it looks like it doesn't want to go lower. Maybe this is something to keep an eye on, that when some pressure gets relieved, maybe this can start to make its way up. Okay, it just looks like it's kind of done going down. So RETL, GXO, And these are on weekly time frames. You know, look at this, GXO. What do we have? Inverse, head and shoulders. And you know what? Nice move. And it's getting back over the monthly 10. So something like this looks like it's working. And if we take this and we bring it down to, let's see, GXO. Yeah, look at that. Look at that. That is gorgeous. That is working beautifully. It's a 50, 200, 50 maneuver. And you know what it did? It bounced perfectly off of the daily 50 with the Moxie indicator above 0. I wish I had seen the stock earlier, but I only came across it with some of my scans recently. But you know what? Now it's on my radar. Clearly, I don't want to be buying it up here. It's very extended, you know, went straight up. So now something like this, I'm looking at and saying, pullbacks might be buyable. And so something like this, if you want to be playing the long side, there are things moving out there that we should just be aware of. So GXO on that one. How about VLN? Look at that one. And a lot of these things are doing the same thing. There's price below the 50, Moxie indicator above 0. There's price below the 50, the Moxie indicator above 0. There are 2 trampoline moves right there. And then, yes, it's very messy. This one would be almost impossible for me to trade because look at those swings. But if you guys are a longer term investor and you are okay with higher time frames and a little bit more movement, look at this thing following the daily 50. You know, if you kind of blur, it looks good. It looks really good. And if you look at that VLN on the weekly chart, doesn't that look good? How about the monthly chart? Look at this. This name has already based. It's starting to go up, and you know what? It got over the monthly 10 and looks like it tapped the monthly 10 for support. And what do we have? There's your double bottom. You have the 8 over the 21. You have the Moxie indicator firing, and you have price now crossing over the weekly 50. You know, so you know there are a lot of names that have already been repriced, and they look like they are ready to start moving up. And you got to think about rotation. So if the Apples and the SPY and the Microsoft and Google and whatever, if these names, these big names, are still weak and starting to come down, like Tesla, and money's coming out of them, where's that money going? You know, smart money isn't just going to hang on to these names. They're going to go move money around and find other opportunities. They're going to find opportunities like this where names have already been smashed, already been repriced, and the likelihood of them going lower is pretty slim. So they're taking money from the big names that are now weak and coming down, and they're refunneling it back into names like this that they can sit on, that aren't going to go down because they've already gone down, and basically at some point they will migrate to the upside because they've already been repriced. Keep that in mind. How about Neo? Now again, these names, they don't necessarily have to go right away, okay? But if you look, double bottom, and now we have a higher low. And you have the 8 looks like it's just about to cross over the 21, and you have price looking like it's trying to break past over the weekly 50, and you have price now over the monthly 10. Let's look at that on a higher time frame too. So you know it can take a little bit for these names to go. Sure, this is either great for you because you can trade the ups and downs, or it's a nightmare. But if you are a hedge fund or a firm, you're looking at this, you're like, huh. So it doesn't want to go lower. We've got a higher low. And you know what? How about a trend change? The 50 is starting to cross over the 200. So there is possibility that this is actually the beginning of a uptrend, even if the market's going to go down. I'm just showing you that there are opportunities out there. Okay, so the market hasn't been going down. The market's mostly been going sideways. And you know, we just have to respect it and see where it wants to go next. And even if the market wants to go lower, there will be some names that don't go lower. They might go sideways, but they may not go lower. All right, everyone. Hope you enjoy that. You know, keep your eyes open, keep your mind open, and you know, just let the market guide you. See where it takes you. All right, everyone. Thanks again. I'll talk to you later.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.